Welcome to Netaji Subhash Open University. In this session, will be discussing on the fundamentals of goods and services tax. Friends, in our country, there are a number of taxation or the tax laws that are applicable on all the goods and services that are either produced, sold, or services provided from different part of the country within that state as well as to other states. Now, there are excise duty on manufactured goods, service tax on the services, on the sales tax, VAT, value added tax, interstate sale was levied with central sales tax, there was octroi from one state to another state, there was a tax on transportation, that is service tax on transportation, and a number of taxes that really goes up the cost to the customer, because all the taxes were ultimately cumulated into the cost, and then the cost definitely goes up. So there was a call, there was a requirement that whether we can reduce all these calls, all these taxes, and minimize all the taxes into one. And that's the reason why India called for a total tax revolution, a change, unification of all the taxes into one. That one is called goods and service tax. The fundamental conception of goods and service tax is like this, that it should be one country, should be levied with only one tax. We should not have sales tax of West Bengal different with sales tax of Odisha. We should not have one product sold out in different state at different rates, so that there will be all the confusions today that whether on electronic item which is available at a cheaper rate in Delhi and also available at a higher rate in Uttar Pradesh, that sort of a discrimination will go out. So the conceptually, the GST says that it should be one nation and there should be only one tax, that one tax called as goods and service tax. The fundamental conception number 2, it says that it should be a destination based consumption tax. What do you mean by destination based consumption tax? That means a goods which is actually consumed in a particular state. In other words, if a goods is manufactured in Punjab and then the goods is ultimately coming to West Bengal for its consumption by the consumer, the tax on that particular goods shall be collected by government of West Bengal, and this transaction from one state to another state is called as IGST, Interstate Goods and Services Tax. Over the years, we had a number of confusions about the multiplicity of the tax rates. The same product is taxed at 5% in Andhra Pradesh, 8% at Tamil Nadu, 10% as Odisha, 12% at West Bengal, and maybe 1% in Delhi. So the prices of the goods were different from one state to another state. And when we speak about one country, one tax, it cannot have such a differential tax rates. Goods and service tax ultimately brought into in our country a uniformity into the tax structure, and that uniformity is called as the uniform taxes in the country. Fourth biggest advantage of goods and service tax, it is like whenever I am a manufacturer or I am a main service provider, whatsoever I purchase, whether it's a goods, whether it's a capital goods, machinery, whether it's a service, and the tax that I have paid on purchase of that goods or services should be adjusted or could be easily adjusted against my final tax liability. So if I am a manufacturer of a car and then I purchase a tire, battery or paint or steel or seat or any other thing for manufacture of that car, whatever tax I pay for purchase of this raw material or the services called as input taxes, I can easily set it off, adjust it against my final tax liability when the car is moving out from my factory. As a result, the total tax liability reduces. If the total tax liability reduces, the price of the product definitely going to come down. That's the fundamental biggest benefit of goods and service tax. And then finally it comes out with another concept. It's like the supply. The word sale, the word services, the word provision of services, everything now merged together into a single word in GST called as services, and the services is the supply is a uniform to the goods and services tax. Friends, we can have a look that how many taxes we had prior to goods and services tax. There was something direct tax, there is something indirect tax. Under the direct tax, we had the income tax or wealth tax. Under the indirect tax, it was a central taxes. The union government used to levy taxes. State government also used to levy taxes. And the union government used to levy taxes in the name of central excise duty on all the goods manufactured, services tax on all the services like mobile services, telephone services, etc. And there are customs duty on the imported goods. When the goods are imported, the duty levied thereon is called customs duty. And the state government also used to levy taxes on the sale of goods called as VAT, value added tax. And whenever the goods are moving from one state to another state, there is a sale from West Bengal to Jharkhand, the tax was central sales tax. Beyond that, there was entry tax, luxury tax, lottery tax, etc. and a number of taxes. So this situation really undergone a big change. You can now see that the indirect taxes remains very minimal. That's like if it is a sale takes place or supply takes place within a state, say from Kolkata to Siliguri, or from one part of Tamil Nadu to another part of Tamil Nadu, then it is only the state GST and central GST. So if the rate of tax is 18%, 9 is CGST, central GST, and 9 is state GST, SGST, total 18%. That's it, no cascading effect, no multiplicity of the taxes. And if the goods or the supply is moving from one state to another state, say from Calcutta or West Bengal, the goods is going to Maharashtra, Mumbai, then the tax should be called as interstate goods and services tax. That rate is also 18%. So in other words, across the country, pan-India, the tax is going to be the uniform on a same product. It is 18% or the rate as may be prescribed. The number of taxes that has been subsumed, that has been clubbed together. So in CG, you can find it out. The central goods and service tax is a combination of central excise duty, additional duty on customs, service tax, surcharges, all type of cess, all put together only one law, only one act. That's called central goods and service tax. And if we speak about state goods and service tax, it is like VAT or sales tax, entertainment tax, luxury tax, entry tax, purchase tax, stamp duty is not taken care of, goods and passengers tax, tax on vehicles, this all put together called SGST, the state goods and services tax. Excepting the stamp duty on the immovable property, on the land, building or flat purchases, every state taxes clubbed together into one. So life becomes really very easy under the GST regime. We need not to file so many returns, we should not go for so many assessments, there should not be so many authorities levying show cause notices on us, and then the people will concentrate more on the business than on the tax compliances. So that's the biggest benefit of GST. It helps the entire business to be restructured. The tax rate reduces, the compliances cost reduces, and ultimately benefit goes to the consumer. So you can just find it out. Manufacturers get benefited. Wholesalers, they can pass on the entire tax credit, so there is no tax burden. For the retailers, benefited because the multiplicity of the taxes reduces. Consumer get a better product at a comparatively lower price, and government ensures that all taxes across the country are received without any lapses, and that's the biggest benefit advantages of GST. And that's the fundamental reason why India adopted, accepted and converted all its age-old taxes into the new law called as Goods and Services Tax. Thank you, my friends.